governance. So I'm going to hand over to Emily, and she's going to introduce the panel that's speaking today.
Thank you. I'm so excited to be here with everyone today about FinTech in general and responsible AI and governance. Obviously, AI has really shifted the world with the increased amount of usage. I'm keen to hear from all the panellists today. Maybe we'll go around the room, do a bit of self-introduction, and then keen to hear what responsible AI means for both yourself personally and also for your business. So maybe we'll start with Dan from WeMoney, and then we'll go around the room.
Cool, thanks Emily, and great to be here at another awesome Intersekt conference. Dan, founder and CEO of WeMoney. WeMoney is a financial wellness platform that aims to help Gen Z millennials crush debt and achieve their home ownership dreams. Our view about safe and responsible AI, I think I'd like to share a story about a real life user. Her name is Emma. She's a 24-year-old administrator working in the construction industry, and one of her aspirations in life is to achieve home ownership. The average age of a first home buyer today is 37. 20 years ago, it was 25. She's been structurally excluded from her goals that she wants to achieve in her life. One of her biggest challenges is actually understanding her credit health and her credit score, and she has to go to many websites, find information about what is her credit score, how does that impact her ability to save up for a home and ultimately get approved. That's the human sort of factor for Emily. What we feel AI will help somebody like Emma is to understand her context, have AI speak to her in a way that is transparent, that is ethically aligned to helping her achieve her goals. And the good news is that the Australian government has released a set of 8 principles around AI. And I think that is actually the good starting point for these guardrails of an ever-changing industry. The last thing that we'll make mention of before I pass it over to my peers here on the panel is that we have launched a new tool to help our members understand their own financial position using AI. It's a very nascent industry, and maybe we'll touch on it in the follow-up questions. The AI, funny enough, was almost the easy part. The tooling now has become so easy. The hard and more challenging part is the regulatory guardrails to also align to those principles.
Thanks, Dan. Gordon Campbell from RDC, Rich Data Co. Our platform helps commercial and business lenders make better decisions. It does that by including the use of AI-based or machine learning-based models as part of a decision strategy in order to come to a good decision. It is something that we've been working on for 8 years. We're based up in Sydney and just launched with our first customer in the US. One of the things that we do is we talk to people about managing and adopting machine learned models specifically. We're not to the stage yet that Gen AI is going to approve a home loan or a business loan, so we need to look at the way that the regulations support the use of machine learned models under existing frameworks, so model risk management frameworks, in order to adopt. So we've been doing this with a few banks, and part of our goal is to see what credit teams need in order to launch models. Models are kind of the heart and soul of where we are focused, and to make those models explainable when we build them, make them explainable when we run them, and help credit teams use these models on an ongoing basis and tune them to keep aligned to their risk appetites and into their existing credit policy. So that's what we do. For me, then we hinge on explainability first. But going back to the question about responsible AI, there is definitions around responsible AI is both explainable and contestable. So what we're really saying is that in some cases there will be a need to put humans in the loop, either directly as part of the process, or give consumers and businesses the opportunity to understand and challenge decisions where they think they have not clarity about the outcome. So for us, the human aspect of this, putting humans in the loop with the models and the decision strategies that guide the outcome, is kind of core to responsible AI. Kevin.
Yeah, how do I follow both of those? So yes, my name is Kevin McGuinness. I'm the Global Head of Client Solutions at Napier AI. We are an industry-leading financial crime compliance solution that very much focuses on the back end of the AML agenda. We service most of the big institutions globally, as well as, typical for this event, a lot of the emerging fintechs. And what we try and do is we try and make sure that as the regulators become more focused and put more scrutiny on with regards to how you monitor and report on anti-money laundering and financial crime and anti-bribery and corruption, that we ensure the ecosystem that these two guys feed into doesn't become curtailed, and you find yourselves getting engulfed in compliance without seeing the benefits of what you're trying to achieve. And for us at the moment, everywhere we go globally, everybody wants to talk about AI. But I think as we get into the thick of it, there's probably a translation query at the moment with regards to what it actually means and what you want to achieve by using it. I was in Germany just last week, very different audience, but nonetheless, there was a multitude of people telling us what they wanted to achieve through AI. And realistically, I think we can get there, but unless we can translate to the regulator that it's transparent, it's robust, it means then that the ethics behind it leaves everybody exposed, and some of the great work that goes on in this stage potentially will get lost. So yeah, nice to be here.
So great to have you all. Can we please give a round of applause to our founders for being here today? The topic that you mentioned just then is around the regulatory frameworks, and then talking about how we can do responsible AI in a safe, reliable manner for a lot of our consumers out there. So Kevin, you actually just landed from the UK, like literally yesterday night. Keen to understand, based on what we've said so far about regulatory frameworks, what have you seen across the world at the moment of what Australia is doing, and also what you've seen in the UK in financial crime?
Yeah, look, came in from Ireland actually, but yeah, two-day trek to get here, and delighted to be here. For us, I think in the United Kingdom it's been quite easy, if the truth be told, and primarily because the FCA, the regulator, wants to drive an ecosystem where startups can come in, they can thrive, they can flourish, and ultimately then the commercial benefit to the region comes along with that. So specifically with regards to AML transaction monitoring, and that's money flowing through the United Kingdom, where it's coming from, where it's originating from, how we then make sure that if it isn't with which the nature and purpose that a customer was introduced to an institution, how you then identify, detect, and fundamentally report. So the FCA has approached Napier as a company to bring on board our transaction monitoring solution, and we have deployed our sandbox, which gives institutions the ability to flex up, reduce, and to basically manipulate different risk thresholds and play around them with regards to what pitfalls may be. And whilst we're sat in the background, we're completely white labelled, the FCA have opened that up to lots of different institutions and fintechs and different companies, because then they will have foresight with regards to what could go wrong within their business. I was in Sydney quite recently and at a great event, right, gorgeous venue right under the Harbour Bridge and so on and so forth, but in the room the guys were a bit apprehensive that the regulators weren't coming to the table and weren't giving this collective and this syndicated approach to, if you get it wrong, bring it into a safe place and we can trial it to see what the potential pitfalls may be. So AI, and at the moment what we're doing is the machine learning, the logic, and a lot of the robust playbooks that we bring to the agenda. At the moment, it's just about the insight and the analysis. Nobody within the financial crime space just yet has really pulled that tactical lever to really push forward the power and precision of AI. So to recap, I think if a regulator has the emphasis to come in and work with the ecosystem, it can only be a positive, and if not, then there's going to be a fear factor around fully deploying AI for financial crime or lending, or dare I say it, in the credit space and so on and so forth.
For sure. And is this something that we see commonly across, for example, open banking and also consumer data right as well, similar sorts of regulatory and framework? Can you see your opinion on this, Dan?
Yeah, it's a great question, Emily. And before we actually started our initiative in sort of an AI, we asked ourselves the question, what could we do internally at WeMoney to, number one, help our membership base actually use this tool for their benefit? And we had three specific solutions and ideas. One, which was, can we use open banking data? And at the moment, I think the rules and regulations and how open banking data can be used in that AI environment was a bit murky. And so for us to go down that investigation, we said, not right now. But can we work on some other use cases? So we had 2 remaining. The other one was a support case. So could we help our members understand how to use a product, which I think is fairly simple, but it wouldn't meet that threshold of providing that customer value. And kind of what we landed on, Emily, was that whilst open banking is going to be on our roadmap, and it's something that we're going to pursue with our AI model development in the new year, we decided to take a step back and find a more sort of regulated sort of space where we could provide a lot of member value. I think the insights are going to be profound. And this is what we discussed last night, is that there is a changing in the UI layer. So if everybody pulls out their phone, we look at a pane of glass every single day, and we go into our banking app and we see a bunch of numbers about our balances. But the AI tooling is going to transform that UI layer, where essentially you open up your phone and it's not like, here's my balances, but it actually tells you, I've paid off your energy bill, you've got an insurance bill due tomorrow, I've paid that, and I've also helped you put some additional savings in a high yield transaction account. And it's personalised to every single individual. And I think that is going to be something that not only industry participants that embrace AI will need to think about, but also regulators. And regulation in Australia hasn't moved to legislation first, like the UK AI Act. It is more principles based, but I think that is probably on the roadmap for Australia to consider, is that what does that regulation look like in the future, as in financial services, you only really have one asset. It's trust. If that trust is broken between you and your customer or your member, then you really don't have a right to exist.
I might just build off that. There was a couple of things that have been raised in both of those conversations that are quite interesting. So in credit, that's kind of my domain or our domain at RDC, there's been governance and regulation around the use of models for a long time. And I like using this analogy, and sorry for anyone who's heard it before, but in 1956, the Olympics were held in Melbourne, if anyone was around, and I wasn't here. But in 1956, that's when AI was first used as a term in a conference. It was also the time that 2 gentlemen formed a company called Fair Isaac, which introduced the concept of credit scoring. So we're here more than 50 odd years later talking about how AI has been here modelling techniques have been here for a long time. We're now understanding that they've actually got the power to change by looking at different data sets. So we talk about open banking giving us transactional information. That is a hugely powerful enabler to help businesses get access to credit. And we all know that small business drives Australia and New Zealand economies. And it really is an important factor in how we think about how to enable or tap into the value of transactional information. So for the regulation, we've got regulation. Banks have been working, credit teams have been working under guidelines and strict model tiering and governance processes. What we're doing is just bringing a new technique in here, which isn't really that new. We're really just bringing them forward and saying, well, if you have more data, there's more data than there's ever been, there's more AI capability than there's ever been, there's more compute power than there's ever been, how do we leverage it in a safe and responsible way? And that's really the challenge. I think the question of AI isn't, it's not if, it's when. And everyone's going to be on an adoption curve. There'll be people that learn the skills, learn how to put the wheels and take the training wheels off their bike and ride forward. And there'll be those that will wait and see how it looks, what it does, and what the power of it is. So you're going to be somewhere in that adoption curve, and we've all got skills we need to learn. But I think, the tooling, I think APRA quoted in the AFR in May saying, we would expect banks to be looking at more AI and machine learning techniques because it's a gateway to efficiency. Efficiency is a cost saver. Cost saver means we can pass benefit to customers, and so customers and shareholders. So yeah, I think this is, it's a new conversation, but it's really quite old in nature.
Yeah, that's my learning from this conversation is that Olympics was held in Melbourne in the 1950s. And it's great to hear that with AI being the next big shift, being integrated into a lot of like banking and FinTech, and we're really living in an era at the moment where we've got access to everyone's data. So I'm keen to essentially just double click on this topic a little bit more, maybe actually deep dive into how you're thinking about the implementation perspective of AI within your businesses. I mean, potentially start off with Gordon, with all these guardrails, responsible AI practices, government frameworks, how are you thinking about implementing AI in a responsible manner? And could you walk us through the process of doing this within your business?
Yeah, so we provide our platform to banks in order to support their lending outcomes. So that could be an origination where say yes or no to a loan. It could be we've already got the money out the door and we're looking, is the customer doing well, or are they experiencing some hardship, and should we step in and help? So the monitoring aspect of a customer in the credit life cycle. So when we go in, we're working with the bank. They already understand a lot of their data, but we're bringing more insights into the value of that data, techniques to handle it. We would be working with them on documentation that helps them go through their credit governance processes, which means we need to understand the data, be able to explain and defend the data alongside of their validation teams. There's a lot of process already in the credit area, and really we're supporting the banks to be able to implement both in a responsible and ethical way. The banks themselves have the responsibility of having an ethics and governance process, so we're really there to support them to do that. If they don't, we're there to help. But yeah, most of the mature banks that we're dealing with have already thought this through, and they're looking for enablers to help them adopt. That's where really we come in.
Maybe I'll pass to Dan. I've seen you do a lot of implementations of AI, and you've spoken about the use cases too. How are you and WeMoney, for example, going through the process of designing, and then to your point earlier about really being able to work with consumer data and having that trust being integrated into WeMoney?
Good question, Emily. And I'm going to pick up on what sort of Gordon said before about the human in the loop.
Yep.
Today we've actually got our engineering team here who have done all the heavy lifting on actually the implementation. And one of the things that we sort of said at the outset is that AI is a tool that helps you get leverage. With the regulations in mind, if you ask a chatbot a question and it gives you potentially an erroneous response or something that is not accurate, or potentially even strays the grey area of contravening any things like financial advice, that for us was a huge sort of red flag, that we would only go to the tooling if those guardrails were in place. And I think what you see today is a lot of the tooling actually takes that into consideration from the outset on how to tune and refine those models to not allow some of that activity to come out. We had some of our early users of our tool provide me a response in Japanese, and the tool did that initially, like in sort of private testing internally. Or ask a random question that actually had no relevance to what the tool was actually designed to do. And we looked at every single query and then developed a better response on how that query could be more refined to help that ultimate user. Because at the end of the day, for a customer, in our perspective, they're using that tool to get some type of value exchange. They're either asking a question to get a new insight that helps them understand something, and rating that or having some type of metrication that allows you to see has value been provided, but also kind of reviewing that from a compliance and a safety sort of point of view. And I don't think that's going to go away. I think you always have to have that human in the loop that helps you refine the model, so you don't get into those issues where potentially you're kind of straying away from the intended purpose.
Anything that you were thinking about, Kevin?
Yeah, no, look, I mean, I'm going to be slightly controversial here in the room, but I'm an ex-consultant, so I helped run part of PwC's financial crime team in the UK for a number of years. And I think there's never been a better time to be a Big Four consultant, because when you go into all of these institutions, everybody's question is, how do I deploy AI? How do I do it safely? How do I do it with transparency? And the answer is nobody's quite sure yet. And the reason I say that is the second point. There's two parts to the next point. When we work with some of the larger institutions who, to Gordon's point, they're massively mature in terms of how they have data governance and how they monitor and dictate the flow of data. All of that is lock solid, but there's still an apprehension when it comes to financial crime reporting and AML reporting to really unleash the power of AI. So we have several clients at the moment who are using the machine learning and using the models purely for insight. They want to know the what if, the potentials, and they're consolidating that and bringing it back to their own money laundering officers and people within industry in the hope that somebody will give them a thumbs up to go ahead and fully deploy. And on top of that, again, not too unlike the guys on the stage here, you know, we're a technology company at heart. We want to get accuracy. We want to make sure we're efficient with how we report to the regulator, but we also want to make our customers self-sufficient. So as the consultants are one side of it saying it needs to be this, it needs to be that, we're at the back end saying, well, you've done the testing, you're confident on the control of your data, why not deploy it? So I think there has to be that middle ground, and it goes back to the translation. If consultants could keep it between the rails, I think quite quickly then you'd find a lot of the institutions quicker to adapt AI for financial crime reporting.
Yeah, it's really interesting to hear it from your perspectives as well. Essentially, like my work at AI at Google, for example, a lot of people are super excited by the opportunities presented with AI. They're like, great, let's implement this. But then thinking about the actual use cases, that's one small part in the larger addition of like the responsible frameworks and ethics and governance. In terms of the opportunities that do present themselves in fintech now, what are you sort of seeing in this space, and what sort of opportunities should we think about if we were to implement it, for example?
Well, I think just in terms of the economy of scale, realistically, when you think about the amount of transactions that go through, I don't know, for off the top of my head, you've got Macquarie Bank down here, ANC, Westpac. Like, I mean, in a given day, chip and pin transactions, cash deposits, human beings quite simply could not monitor that effectively. It's too broad ranging. So if you don't deploy AI and you don't bring in the machine learning and the analysis and the insights, the industry would just fall over. And that's purely from a financial crime perspective. I can only imagine how many mortgage applications, credit card applications, loan applications go through every day. Again, banks don't have hundreds and hundreds of people to monitor and check whether or not they meet the criteria. So I don't know about you, Gordon, but just basically the economy of scale could not exist now without some form of AI and machine learning.
Yeah, no, it's 100% true. And I think we kind of look at, it's easy to find a good customer, right? Banks are very good at finding prime customers, and they're the ones that are going to pay you back. But you actually need to take risk. It's kind of the value point of lending, right? You need to make money, and you're going to lose sometimes. But you need to take some calculation in there. The more data you can take into there, in theory, the more accurate the decision could be. The thing for us is really around inclusion. If you can understand somebody better by using more data, and you could therefore include them in a credit cycle, potentially help them grow their business, or restructure in a hardship sense, your portfolios are better, the bank is stronger. There's more upside by using these techniques, but we have to grow into them. And I think to the point here is, we had some input through FinTech Australia into some of the thinking that would go into the Minister for these AI ethics guidelines. I think we're not at the end of that journey, and there's a lot more that government and groups like FinTech Australia can help to promote the conversation. I think this is just from a maturity point of view, we've got a little way to go, but those people who are thinking and trialling and adopting now and learning where those guardrails kind of apply to them, I think it's very good news.
I'll just add one last part to that, and I think the way that we think about it as well is that the use case that we're solving today is helping people understand their finance a lot better. To get financial advice today will cost you about $5,000 to go walk and see a financial planner. The cost for a chat-generated AI query is 0.06 cents. So if you look at the cost, sort of per million tokens or words that gets responded backwards, what I suspect will happen over time is that the cost curve collapses, where if you can get to a point where you can provide high quality insights to people, you can do more of that. In Australia today, $5,000 is a huge expense, and that's for somebody that's later on in their life, that is built wealth. But if you're a 18 to 40-year-old, which is half of the adult population in Australia, 10 million people, what are they getting? And they're missing out on that opportunity to receive some type of guidance. and done in a safe and responsible way, I think could actually help solve some of those systemic challenges, particularly of our youth that live paycheck to paycheck, don't have a good understanding, turn to other sort of social media sources to get a sense of education, rather than that high quality insights that you get from the planning industry. And so, we're super thrilled about the next steps, exciting, and really awesome to be partnering with people like sort of Google and other people in this room, because I think it's all going to be a collaborative sort of setting of the fintech industry, large and small, coming together to solve these challenges together.
Thank you, Dan. I've just been warned that we're 2 minutes away from lunch and that I'm in the way. Maybe to sort of summarise our conversation in terms of responsible AI, or that you've spoken about in the space that you're in at the moment, could maybe each of you, will go around the room again, and maybe starting with Dan, maybe in like 1 or 2 sentences, do you have any advice for those who might want to implement AI, but do it in a responsible and ethical manner?
Start small, start on a low-risk use case, get it to market, get a good legal team, but also get a great technical engineering team that are very passionate about that cause. You don't have to go big, you don't have to solve everything, start small, because that will then give you the organisational competency to start moving into those bigger, higher use cases over time.
Echo everything there. I think start is the big word there. The second one is, we've found in terms of certainly larger organisations, clear sponsorship from people who can help drive it, because the first few use cases you're learning. You'll stub your toe and you'll learn, and you'll then look at the tooling and the practices. You'll find partners that know things about AI, and you'll start to work with those that demonstrate the competency and domain knowledge. So starting solid partnerships, solid sponsorship within the organisation.
Yeah, and specifically on financial crime reporting and at the AML agenda, I think, even if you're an Australian bank and you have a branch in London, start deploying it in the UK or even in Singapore or somewhere where the regulator is going to give you some sort of guide rail, because ultimately then it'll give you the confidence to spread it out across your wider institution and geographical locations. And again, just to echo what the 2 guys have said here, start small, use it sensibly, and ultimately then confidence will build.
Amazing. Thank you, Dan. Thank you, Gordon. Thank you, Kevin. Could we all please give another round of applause to our founders for...
Thank you.
Thank you, Emily.